Okay, folks, welcome back. Let's talk about NZDCAD and EURJPY as I promised in our previous video. So we're going to talk about order flow, about NZDCAD, then we go to EURJPY. So hope this video is going to be helpful and it's going to show you guys what to look for, how to approach market. So as always, if you're going to study any pair, make sure you start from higher time frame and try to use IDC broker. So I have one here because you're gonna have enough data. So you can see ICE, not the IDC, ICE broker. So if you go to 12-month time frame, so you can easily see on a higher time frame we have this type of structure. So as usual, make sure you look your chart and try to mark the highest point you see as of now, which is this one. Put a horizontal ray on this high, and then go down and try to do what? Try to find the lowest point you have on your chart, which is this level, and you put a horizontal ray like this. So according to the structure you see, where do we have a recent break of structure? Where do we have a recent break of structure? A recent break of structure is here. First of all, if you look left, I tell you always look left. So you have this recent break of structure as of now. So our range, if we start from here, our range, our current range, we are going to work with, we would start from here all the way down here as our range. Basically, we would have marked this level as our range. After that, as you can see, market was pushing higher and broke our range with a clear high, clear candlestick wick. We broke our range. So, okay, this time you see market creates a high, a low, a high, a low. Market is pushing down this time, but we see that market is done violating our range high. So in this case, this was our bearish range, but our bearish range is broken, meaning at the moment this market is bullish here. We probably think that market is trying to come back here to try, for example, to fill this imbalance resting here. Understand that? Understand that? So we are bullish this time because we have a bearish range. If you look left, this would be our bearish range, but our bearish range is broken here. So this time we are bullish. We are bullish. So our range of interest is gonna be from this low all the way to this high. To this high right here. Then everything else is what? Everything else is a break of structure right here. So we have a break of structure here. This is a break of structure. This is a break of structure as a signal that the market is willing to come back here. We know what market is trying to achieve. This is a break of structure. This is a break of structure. This is a break of structure to the upside. So, meaning this time our range is bullish. So where is our range? Our range starts from this low all the way to this current high. This is our current range from the top, from the bottom all the way to the top. This is our current range. Hope you understand. So we mark this area. We can even make it bigger. So this is our range. This is our range. You see? Now, what remains is what? What remains, we are going to do what? We are going to study the structure market is using to break this high. So, you have this high, internal high, here. You have this low. You have this high, right here. You have this low. Look at this. So you have this high. So market is creating a pullback. This time, the movement we have is a pullback. Meaning, internal structure, we have this area as internal structure range, as you can see. So we have a high, we have a low, we have a high. Market is trying to create a pullback within this range. So internally, we are dealing with this range. From this low, this red dot, you see here, all the way here, as you can see. Now, we need to study the movement. First of all, we want to see how market is going to trade back to our optimal trade entry, somewhere here or somewhere here. So this pullback is still going all the way down. We want to see market pushing all the way down on this optimal trade entry. Hope you understand. Now, since we have an idea of what we have on 12-month time frame, we can simply go to monthly time frame to do what? To study the structure market is using to create what? To create this downtrend. To create this downtrend. So, this was the high. This is the mini high. Internal structure high, low, high, low. Market can create another high in the future, which will take a longer time. But you are interested in knowing what is going on here. So if you study this structure market was using to push higher, you can simply see what was going on. If you study this literature structure market is using to create a push to the upside. So you can easily see what was going on. High, low, high, low. You have to do this. High, low, high. Basically, this is not a high because it didn't break the low. So it didn't break the high. So you have a high, a low, a high, a low, a high, a low. We have a high right here, a low right here, and another high. So we've got what? We've got a break. This is a minor break of structure. This is a minor break of structure. This is a minor break of structure. So after this minor break of structure, we've got what? We've got a bearish range. We've got a bearish range. So this bearish range is a signal that the market is going to come back all the way down. Remember, every time we get a range, we need a relative pullback. We need a pullback of that range. So we've got a break of structure here. Market is pushing higher. It's grabbing what? Primary liquidity, which is this high. Primary liquidity is taken here. This is the primary liquidity is taken. So when I'm teaching, I believe you've watched the previous videos of mine so that you understand the primary liquidity. Primary liquidity is taken here. So this is a successful inducement. This is a successful inducement. Buy stops are taken here. Buy stops are taken, right? After taking the high, liquidity on this level, market is pushing down. So we are, market is creating this structure, low, structure high, structure low. You see how we deal with the order flow? So we have another break of structure right here. This is another break of structure. After this breakout structure, market is returning back again to grab what? Primary liquidity of this range, which is this high. This one you see here. This is what we call primary liquidity of this range. So, this is another successful inducement. Buy stops. Buy stops are taken one more time. Buy stops are taken one more time. Then, what is your expectation? Your expectation as of now is that NZDCAD is going to do what? To take this low. This should be the next target. This should be what? This should be the target of your chart. Just mark it as your target or sell stops, right? You can mark it as your sell stops. Market is doing what? Market is going to target, right? So we are pushing down to take this low. So where is this movement going? The whole move here. The whole move here. First of all, we want to see how market is probably going to feel, for example, imbalance we have here. Your first area of reaction is going to be this imbalance here. Is to see market react to this imbalance resting here. So start thinking like this. How NZDCAD is going to trade in this area. We still have what? We still have another imbalance resting here. This below this liquidity level, kind of minor primary liquidity resting there. And then you have what? We have a gap right here between these two candles. You have a beautiful gap sitting here. So these are the stuffs you need to mark on the NZDCAD. These are the stuffs you need to mark on your NZDCAD right here. This is how to identify a true direction of your pair. Now, since we have an idea of what is going on, we need to study the movement market is making here all the way down here, because our opportunity is to catch or sell opportunity market is going to make all the way here. You do not have to sell and exit here. You can take 1 monthly candle. You can trade 1 monthly candle, 1 weekly candle, knowing exactly what is going on. You do not have to stay in this trade, right? You can take daily candle or weekly candle, knowing exactly what the pair is trying to do. This is the beauty of order flow. You are trading knowing exactly. When I say exactly, I don't mean you move the market. I simply mean you have a full picture of where your pair is heading to. Hope you understand. Now this time, we are trading a pullback. The whole move is a pullback. The whole move is a pullback. Now here, we need to change to another time frame to study. To study what? To study what is going on. You can go to weekly time frame, for example. As you can see, on weekly time frame, we have a beautiful structure forming. A beautiful structure forming. So, after taking this liquidity, minor structure was broken somewhere here. If you can see. We have a little minor structure that was broken. Maybe if you use daily time frame, you will easily see that. Right? Kind of minor structure being broken here as a signal that market is willing to do what? To go down. Right? So let's go back to weekly. I'm just trying to show you what was going on there. So, on this area, you have what? You have a market creating a low, market creating a high. So, market has started creating what? Has started creating structure for you. structure for you. Not to understand what is going on, or every time you approach a chart, try to mark those imbalances. Try to see what happens when the market is done, for example, feeling this imbalance. We have imbalance here. Try to see what happens when institutions are done removing this imbalance. The next step is to go back to remove another imbalance that was created here. As you can see, this is what the market is looking for. So market is pushing down. Market will be targeting another imbalance. Market will be targeting another imbalance. You have imbalance resting here. So we have broken our structure. We are expecting what? We are expecting a pullback, right? But not that market will not keep creating this type of structure all the way down. It will have a time. It will have a time when it will create a pullback and it drops very, very heavily. So remember that. So we have market feeling imbalance. If we get the signs of a pullback, then we'll be thinking of what? We'll be thinking either internal structure continuation of within this range or a deep pullback somewhere here. So you have to know you have an imbalance formed here, but the candle is still moving. Maybe it will clear everything when it goes higher. But at the moment you have a flow. The first thing is to have order flow and to know your range. This time, this is your trading range. From this high all the way to this low. This is your trading range. This is your trading range, right? So if market creates a pullback and start going down, you have to think the next imbalance the market may fear before it gives you another reaction. Hope you understand what I mean. And I hope this is helping you guys. Please like the video, comment below, show me your love, right? So we have a bearish range. We don't know when a pullback is going to happen, right? But if you go to daily time frame, starting from here, for example, you can see how market broke this retractor structure, create a pullback within this imbalance. Within this imbalance, and the market decided to do what? To push higher to create a pullback on a certain zone, right? Then market start dropping, right? After filling the zone, it gives you a clear break of structure here. You have a high, a low, a high, a BOS. Every BOS deserves a pullback, right? Every range. After breaking this level, you know you have a bearish range from this high all the way to this low. This is your bearish range. So all of these two candles are creating a pullback. After creating a pullback, market is going down to break the low one more time. Pay attention here. There's something I want to show you. So we have got a break of structure. We have got a break of structure right here. As you can see, market is using what? Market is using internal structure to create this trend all the way down. Remember smart money objective. You have a low, you have a high. Market creates a low. When the market starts pulling back, everything here becomes the liquidity, right? Creates a high. Pay attention to what I'm showing you. Then you have got a break of structure right here. After this break of structure, we have never seen market creating a pullback. Market is still using what? Market is still using minor structure. Market is still using minor structure to push all the way down. So we have a little low, a little high, a little low, a little high, a little low, a little high. As you can see, what do you expect? Another little low. This is what you should be thinking. Do not try to think market is going to come back here. Focus on this current structure. There are ways you can enter here. You remember a classic break and retest strategy that I taught you. You can use it here to know the area of reaction and then find opportunity for you to short this candle. Right? The first thing you have to do when trading is try to think how to try to detect a direction of the market, a direction of your daily candle, for example. So if market is trading on this area, you see the first candle has touched this your zone, maybe secondary zone. You have to think that the next candle is likely to go down, next candle is likely to go down, next candle here is likely to go down. So if you're going to trade, you better, for example, tomorrow on Monday, you better think how this candle is likely to go down to. And then using the trading sessions, power of free, you can do what? You can catch the move, right? Try to think how this daily candle is likely to go down, right? Think that way. I'm not giving you a signal because it can even push higher. But according to the skills you have, the structure we have inside here, will show you exactly how this candle is likely to push all the way down. So whatever you have here, we say this is our current range from the high all the way to the low. So if this movement pushes down, then this will be, you keep pushing the line below, right? Your range is still from this high to this current low. So if market goes higher and breaks a high, do not try, and you see a pullback, for example, like this, do not try to buy here. Avoid that. Avoid that. You better think when the market is trading higher, when it's pushing higher, to catch one candle, when the market is pushing higher. Because if you try to buy here, on this level, you can easily be manipulated. This is the nature of market. You can easily be manipulated. Look at here. Market broke a structure here, then tries to push down. If you try to buy here, you will be stopped out. This can happen. So the same here. This is a high risk zone because you are going against the trend, and market tend to perform so many manipulations on this area. So you better, for example, trade one candle. Try to think how this movement is likely to unfold. Instead of trying to take overall movement, you can trade one candle, trying to see, maybe catching your 30 pips, 20 pips, and you are safe until, if you want to be a swing trader, until you wait, or position trader, until you wait the market comes back to the zone, and then start pushing down. Then you can take a trade and you hold it forever if your mindset allows you to do that, right? If your emotions are stable, if I can say. So here, this is our current zone. So understand, the next movement you have to expect is to see candles targeting this low, because this is what these retractor ranges are dictating. They are dictating you to believe what? To believe that the market is doing what? That the market is pushing down. That's it. So as market start creating a pullback, you have to think about how market will create deep pullback or internal structure continuation, right? Then the market is using what? This internal structure. Remember, this zone was not mitigated. As you can see, you have a breakout structure, you have a successful pullback. Here you have got a breakout structure, market did not come back. And you see, this has taken what? Liquidity. This is a strong zone. Instead of going all the way to the top, NZDCAD may decide to what? NZDCAD may decide to create a pullback here and use this internal structure to maintain a trend. Remember, I talked about this very often on many videos I talked about, right? Previous videos. So it can trade back and use this internal structure to do what? To continue a trend. Hope you understand. Because the market will not keep creating this type of structure. It may use this level and it falls very quickly. Hope you understand. So what you have to do, again, make sure you look at your chart. Try to think those imbalances. Market is likely to come back to fill those trade imbalance, price inefficiency. Market is likely to come back to fill trade on a certain, especially the candle here, and then start pushing all the way down. So this is how you have to think about order flow. This is how you have to think about order flow. So if you are done with this broker, because the more you go through a time frame, the more you're going to see choppy candles. So for example, if I go to 5 minutes, you will see bad candlesticks. As you can see, use this broker for order flow, but when it comes to trading, choose another broker. As you can see, these candles are very choppy. As you can see, instead, you can keep your chart somewhere as your order flow analysis. As you can see on my trading view, I have a zone called the order flow on NZDCAD, right? But here I have NZDCAD, of course, a pro trend setup when we have a pullback here. Okay? So here, if I go there, we see, I know I do not have to mark everything I did on my order flow zone. If I'm going to trade, I'm interested only to have this type of drawing in my chart only as my current range to focus on. As my current range to focus on. Right here. So this is it. This is the current low. After this current low, this is your range. So you have this as internal structure break, internal structure break right here. So we didn't see market trading back in this retreat range, internal structure range, as you can see. And then you have what? We have our recent structure, which is this low, this high, and this low. We have this type of information. So all you have to do now, this is where you start working with other time frames to try to see what market is giving you. What market is giving you. As you can see, we are selling from secondary zone of this area. For example, we are selling from secondary zone of this area. I talked about this strategy, classic break and retest, and how to find the zone to choose for a reaction. So here, you have imbalance here. Market is done filling the imbalance. Look at this precision. Look at this precision, right? Market is done trading on this imbalance. So from here, if you are going to trade daily candle, let's say for example, daily candle, you have this candle crossed as bullish. You have the two candles here, 3 candles, okay, somewhere like this. So if you go like to 15 minutes, for example, time frame, so you can have an idea. So we have 3 candles. I think I marked the one. So let me go back, or I can use my indicator. I have a good indicator here that can help you. Let me turn on my indicator here that shows me days. Don't know why this is not working. Was it deactivated? Not sure. So we have so every euro zone shows you Asian range. So you know you can have order flow, how market is moving, try to see New York session hitting the zone, market is going down, breaking this retracement structure, type of tunnel structure continuation right here. As you can see, this is how you can start getting an idea using the sessions how market is likely to do what, how market is likely to move. Don't know why this indicator is not working. It was deactivated. I think so. So 5 minutes. Okay. So as you can see, how market was trying to move. Right? So you can be a seller in these zones. I'm not going to show you entries. There are rules, there are models you have to follow when it comes to taking entries. You understand? Market maker, buy and sell models. So you have to know how to use that. Simply, I'm showing you how to identify order flow and how to detect the next movement. So here, if the new day start or a new week start, you have an idea of where your chart is likely to go. It's not about drawing trend runners. It's not about doing what and what. You are getting the flow. If you repeat the same thing on what time frame, the way we did the order flow on our time frame is the same. You're going to have an idea of the right range you are going to use. To use when you are selling. So remember, you are in a very discount zone. Market can easily create a pullback to the upside. So you have to do what? You have to remember that when it comes to trading, you are in a high discount zone. Market can easily, for example, do something like this. Then it continues to go down, right? Maybe trading on this balance resting here. You understand? This imbalance resting here. This is how order flow works. This is how we deal with order flow. So use this method to identify the direction of your pair. You then know your range. This is a bigger range. These are the small ranges we are using. This is internal range. Now we didn't have a proper mitigation or a deep pullback, but it can easily be taken and trade with our bigger range. So you wait for reaction here or somewhere here, and then keep trading in that way. So going to EURJPY. Let's go to EURJPY. So EURJPY, you can go to again same broker, ICE data, and then load the chart there, and then try to think. As you see, the indicator is now working, and try to think how this market is going to move. So from 12-month time frame, all you have to do is the same thing. Try to do what? Try to mark the highest point, and mark the lowest point. So you have got your range on your time frame. So where is your recent break of structure on the left side? The recent break of structure is here on your left side. So this was supposed to be what? This This was supposed to be your bearish range. This was supposed to be your bearish range. Right? So after this bearish range, the bearish range is broken here. Our bearish range was broken, meaning this pair is becoming bullish. It's becoming bullish. Maybe to trade back in this zone, to take something in this area. As you can see, this pair is now bullish because our recent breakout structure is here. This was supposed to be a bearish range, but the bearish range is now taken. As you can see, it was taken here. It was taken on the high. So after being taken, we are now bullish. We are waiting for a pullback. A pullback is formed. This is the pullback. We have a pullback all the way down. So after having that pullback, we know this is going to be the next target. EURJPY is heading to target this high. EURJPY is heading to target this high. So where is our range? Our trading range is now here. Our trading range is now here. We have a bullish range. We have a high, a low. We are waiting for a higher high. We are waiting for a higher high. Now we see what happens. As the market was dropping down, it was creating a low, a high, low, high, low, as it was pushing down. So you can now immediately go to like monthly time frame and try to see what was going on. Try to see the structure Euro USD was using, right? A low, a high, a low, a high, a low, a high, a low. Then you got what? We've got a retractable break of structure. We have got what? We have got a retractable break of structure. Okay, so we have got a break of structure in this area. After this break of structure, try to see what is going on. Market is trying. We didn't see market coming back on this area. So after this break of structure, or this little minor break of structure, we were expecting what? This was a bullish range. Then here, since we have traded on optimal trade entry, which is this area, optimal trade entry. So this pullback is like to do what? This market is like to push all the way higher, breaking this high, and it continues to target this level right here. So you have to understand. But breaking trading on this optimal trade entry is not enough for us, right? So we have a strong zone. Remember, every time we break a structure, we want to see a kind of pullback forming. We have got a total break in this area, then market dropped with a total pullback here, then market is still coming back on this sponsored candle sitting here. So we have to pay attention on this area, right? We want to confirm a break here. If market doesn't break this level, doesn't break the high. If, for example, if it reaches this area, and they start pushing down, breaking this level, any pullback you get, and you get a confirmation, you can start thinking now market is willing to come back again for this zone to remove everything here, trading, for example, on your bullish order block, resting here before it does what? Before it continues again to complete the mission. So you have to think about that before it goes higher to complete what? To complete the mission. This is how you must start thinking, right? But you do not have to care, right? Your job is not to keep predicting all of this movement. Your job is to understand where market is leaving, market is leaving the zone on this area right here. It is trying to push higher. That's it. We are bullish. That's what we want, right? So here, look at this. After trading on this optimal trade entry, we've got a retractor break or structure here. After this retractor break or structure here, you can see, remember, every time we get a break or structure, we wait for what? We wait for a pullback. We wait for a pullback. Let's see. Market is pushing down, trading on optimal trade entry on this area, as you can see. Then the market is pushing higher, right? Market is pushing higher. So we have got a break or structure. We've got a pullback. Market is pushing higher. We've got another minor break or structure. Remember, we are using this retractor structure to push again in this area. So everything else here becomes a range structure of this break or structure we have here. Becomes what? Becomes a range structure of this area we are using, right? As you can see, market can easily come back to trade back on this area, but again, we don't care much. We don't care much. What we care about is the recent what? Is the recent movement market is using, and that's what we need, because we need what? We want to generate our 100 pips or 80 pips every day, or 100 pips a week, right? But the movement we truly do what? We truly understand. So we know we have traded on optimal trade entry here. So this is likely to be taken. We will not trust it. This is likely to be taken. But our job is what? Our job is this high, this low, and this high, this low. So we are pushing higher to target this high. So where is the current target? After this break or structure, we have here, our next target, we got a pullback. Our next target is going to be this high. This high. We are still in a monthly candle, right? So we want to achieve that target, to take out that high. That is the mission. After taking that high, we will keep monitoring the price. If it takes the high and it creates a pullback, we will be looking for what? Sell opportunity when we are having what? When we are having a pullback. That's it. So do not trust this high. Overall, on a high time frame, we want to take this high. We are heading there to take out this high. Hope you understand. And the more you go through a time frame, so this will be taken. This is what we want to target. The more we go to lower time frame on this broker, the more we see choppy candlesticks. So since you have your range, you can simply switch to FXCM or Forex.com, then and try to see what? Try to see the structure you have. Maybe Forex.com. Try to see what? Try to see the structure you have. So in Forex.com, we know our range. We have broken the high. Then this is the target. Market is targeting this high. Before we think of larger targets, we have to make sure we know what is going on in this area. So dropping to weekly time frame, we have another hidden structure, as you can see. So this time frame is revealing another structure we didn't see. This is a beautiful structure, as you can see. It was truly respected. I think so. It was truly respected, as you can see. You didn't take it, so you can refine your marking, right? You can refine your marking and then mark this structure as what? You mark this structure as your high, your low. For example, look at this: high, low, high, low. All of these are ranges: high, low, high, low. We are expecting another high. So you can adjust your marking as I said, and then mark this area as your break or structure. Where is your range? So your range starts from this low all the way to the high. This is our trading range. This is our trading range. As you can see, this is our trading range. A pullback is over. The pullback was over. As you can see, this was a range. It was not taken. As you can see, it was not taken. Maybe I can zoom and you can see. If it is a good range, if it is a true range, market will never try to take it. Must respect it. That is the rule. Not even a single pip. Right? So, this is the target. We are targeting the high. We have got a direction of our pair. So we need to drop to our time frame like daily to see a whole structure we have. So in this day time frame, you can see how market broke this level. You broke the low here. After breaking this low, you've got what? You've got a lower low forming on this area. Lower low, lower high. This is inducement, right? Then price drops one more time, creating what? Creating a low, creating a high on this area. As you can see, then market creates a low. This is minor structure. How do we know? Market is gonna go higher. It will go higher once we break this high, as a signal that this pullback is over. Then we wait forward. After breaking this level, we have got a bullish range. Every range deserves what? Every range deserves a pullback. Hope you get the idea. So we have this high, we have this low forming, right? This is forming where? On this SMS. As you can see, we have SMS here. You have SMS. So market, you see where market is trading somewhere here. We are not talking about the POIs. We are talking about identifying a true direction. But you have to know when the market is pushing, as always, try to know what the market is looking for. Imbalance. You have imbalance resting here between this high and this low. Right here. Making this candle another block to pay attention to. This one. Another block to pay attention to. This candle. Market is trading on that zone. After that, market is pushing higher after breaking this return to high. A signal that we are pushing higher. So where is the target? Again, the target is going to be this high. The target is going to be this high. So, we have impulsive move is creating what? Is creating a beautiful structure. The target was met. Internal structure is moving very well. So, from this high to this low, everything is what? Is a range structure. So, what is our expectation? Our expectation is to see what? Is to see EURJPY creating a pullback. Because every time you get a range, do not forget that we want to see a pullback. A pullback can reach this area, or it may create a shallow pullback somewhere, like break and retest, but we need to see something going down. That's what you have to keep thinking. So, you have a break here. Everything here becomes what? Becomes a range structure. Everything becomes what? Becomes a range structure. This is a range structure. You understand? This is a range structure. After breaking the high, minor pullback, we go higher. This is range structure. So pay attention to this high. So you must have a range structure with another range structure. So you have a high, you have a low being formed here. This is another breakout structure. After this breakout structure, we need to see market creating a pullback, at least within this area. Maybe we not have a deep pullback here, but you have what? You have another structure to play in. So we need to see if market gives us opportunity, for example, to trade on optimal trade entry of this territorial range. Somewhere here, 0.705. We would like to see if market gives us opportunity to trade back in this area. How do we know that? We know market is coming here when we break a certain structure here. So, since we know the zone, our job is to what? Our job is to mark our imbalances resting here, because this is what the market can easily target. This is the imbalance resting here. We have another imbalance resting here. Remember, if you treat this as a range, market can use internal structure of it to continue a trend which is somewhere here. After filling this imbalance, it can trade a little bit down here, and then boom, continues to go higher. So after this little break of structure, remember, market can drop to anywhere, right? But what we want is to monitor the current movement, to try to think how a daily candle is going to behave and trade that daily candle, for example, or weekly candle. So if we go to H4, if you look at here, something interesting here. If you look at this structure, you can easily see that you have got a breakout structure here. After this breakout structure, we may probably have what? We may probably have a pullback. This can probably be a signal that the market is going to do what? To come back here, right? Because after this breakout structure, we have a bearish range on our time frame. This is a bearish range. Every range deserves a pullback. So we may have a pullback within that range before market comes back to look for something. Because it's been trading with a strong momentum, we need to see market coming back to clean out some liquidities, even imbalances and liquidities, guys. We have some sell stops resting there. Market can easily come back to take them, and then, for example, creating a little pullback, and then we continue higher to take this current target. So if you go to H4 time frame, so you can easily see what I'm talking about, right? That's what I'm talking about. You have got a break of this area. After breaking this area, what do we expect? We expect what? After breaking this area, market is going to create a pullback within this range, meaning you have a current bearish range here. You have to understand, you have a current bearish range on this area. So we are trying to detect that EURJPY is likely to create what? Is likely to create a pullback. Is likely to create a pullback, maybe to come back to do what? To target these imbalances. So making this level a sell stop. This is the bottom here. This can be your sell stop that EURJPY may target. EURJPY may do what? May target. This is seemingly equal lows. Can be targeted by EURJPY. As you can see, above your imbalance, those are the liquidities. For example, here, this is the liquidity. Right? As long as it sits above your imbalance. So here, how do we confirm that the market is going to create a pullback here if it breaks the structure? And this is what we have here. After breaking this structure, every break of structure deserves a pullback. Every range, we have got a bullish range. With this bullish range, you have imbalance of it somewhere here. You have some kind of imbalance resting here. So this imbalance, we would like to see market coming back to fill this imbalance. So that I mean, when the market, for example, trade back down before going back somewhere, maybe on this rejection block, before a heavy drop. Before what? Before a heavy drop to your liquidity. To understand what I mean, let me give you a hint. Look at the past data, you will get an idea of what we mean. After breaking this level, this is how we take the pullbacks. After breaking this level, we had what? We had a bearish range from the high, from this high here. I will remove this. We have a bearish range from this high all the way to the low. To the low here. This is a bearish range. So market was creating a pullback. How do we know market is going to create a pullback? When it breaks a structure. This is a structure that was broken. This one. So after breaking this structure, we have got a return to bullish range. So with this bullish range, we need to see a pullback within that range before we reach this area. This is why we see market is doing what? This is why we see market trading back within this imbalance. The power of backtesting, or simply you can simply use your own eyes and try to study how the chart always move, right? With a clear ABC corrective move for those who trade the wipe-off. Sorry, area to wave. ABC corrective move. Correction. A correction have two cycles. One cycle, second cycle. If you understand the price cycle, right? The same. This is probably the first cycle. We need a pullback. Then we create the second cycle. And then we start dropping heavy. Isn't it amazing, guys? Isn't it amazing? So we've got a breakout structure on H4 structure is broken. We need to see a possible pullback within somewhere here before we go higher. So when a new week starts, maybe on Monday and Tuesday, you can be a seller. You can sell this little move, for example. You can start approaching the daily candle Monday and Tuesday thinking how it is likely to go bearish. Because you have a flow. You have a flow for your chart. You have an idea of what to look for. And then, after market, for example, is done filling your imbalance. For example, this is going to be, for example, Wednesday. On Wednesday, market is done filling imbalance, market is trading here, a new candle start. So you immediately have to think how this candle is likely to be bullish because the initial is complete here. So we are likely to go back, maybe to look for rejection blocks resting here, right? Before we go down. So when the market is here, think of a candle that is going to open within this zone that it is likely to be bearish. Then for all the structure market is using in that moment, and then you know exactly what you are going to do, what you are going to expect, right? So if a new day start here, you start thinking how markets like to create a pullback. For example, on this candle, you can go to one time frame to see more structure. For example, 15 minutes, right? You can think how market. Let me check on 30 minutes. 30 minutes. I don't see a good one. Let me check on 5 minutes. Okay, maybe don't see a good one. A beautiful down candle. Okay, but what I'm telling you is this. The power of structure is this. A new day, for example, start on a Monday. When a new day start, for example, you may have what? You may have a market, for example, trading higher, for example, take this level. That's just an example, right? And then after taking this level, for example, it may show you a minor break or structure. For example, during New York or London, then you have an idea. Even if you have a bullish range, this bullish range is likely to be taken for a quick move to trade within this whole imbalance. After that, market is ready to head back to the top to look for something. Mark those balances you have here, and then be there when the market is here, because it makes a reversal. It makes a reversal. That will be your opportunity to short the market all the way down here. Go back to the history, study the chart behavior, have a flow of how a corrective move is formed, then you've got the whole picture of your pair. And then you will not be afraid of using 1 minute range with your 6 people of stop loss when you are targeting, for example, this sell side liquidity wasting here. Hope this makes sense, guys. Hope this video is very powerful. Hope it's changing the way you approach the chart. I'm here for you. Keep subscribing. If you need more refinement, you can reach me and I'll show you guys how to truly detect the move, right? And then we trade our way to success, if I can say, right? So this is it for today. Make sure you subscribe, you share the video, you like it, you comment, and then we move on, guys. Until next time, good luck and good trading. Don't forget to follow us on our channel, Telegram channel, so that you can get motivated. Keep seeing what you are doing, guys. So thank you so much. This is JD Forever, FX Beethoven Forever. Until next time, good luck and good trading.